Hello everyone. The topic we are going to discuss today, that is the super profit method. In this lecture, we will learn how to calculate the amount of super profit and also how to calculate the amount of goodwill with the help of super profit. I am Sujit Kumar Sahu, PGT Commerce. So let us start. Super profit method. The goodwill will be calculated super profit multiplied by number of purchase years. Means we need to find out the amount of super profit first. Super profit equals to average profit minus normal profit. Means we need to find out the two profits. One is the average profit, second one is the normal profit. How we will calculate the normal profit? Normal profit equals to capital invested multiplied by normal rate of return divided by 100. Capital invested, it is also known as a capital employed. Capital employed, there are two approaches to find out the amount of capital employed. One is the liability side approach, second one is the asset side approach. Liability side approach, capitals plus reserves minus fictitious assets minus non-trade investment minus goodwill if any existing in the books. Asset side approach, all assets excluding goodwill minus non-trade investment and fictitious assets minus current liabilities. Here is the numerical question. Rita and Geeta are partners in a firm. The capital of the firm is rupees 4 lakh and the market rate of interest is 15%. Annual salary to partners is 24,000 each. Profit for the last 3 years were rupees 1,20,000, 1,44,000 and 1,68,000. Goodwill is to be valued at 2 years purchase of the last 3 years average super profit. Calculate goodwill of the firm. Now here is the solution. Goodwill equals to super profit multiplied by number of purchase years. So first we need to find out the amount of super profit. Super profit equals to average profit minus normal profit. So first we will calculate the average profit. Average profit equals to the profits of the 3 years already given in the questions. So we need to find out the amount of the average profit. That is the average profit 1,44,000. Total annual salary 24,000 each. There were the two partners, Sita and Geeta, and each one was being paid 24,000. Now the total annual salary will be 48,000. This amount has not been deducted. That's why we are going to deduct this amount to find out the amount of actual average profit. Now the actual average profit will be 1,44,000 minus 48,000 equals to 96,000. Now we need to find out the amount of the normal profit. Normal profit equals to capital invested multiplied by normal rate of return divided by 100. Capital invested, it is also given in the question rupees 4 lakh multiplied by normal rate of return. That is also given in the question. If you see the question very carefully, you can find out the amount percentage of the normal rate of return, that is the 15%. So this is the amount of the normal profit, that is the 60,000. We have got both the profits, average profit and the normal profit. So we can easily get the amount of the super profit, that is the 36,000. Now the goodwill will be 36,000 multiplied by number of purchase years, and the number of purchase years also given in the question, that is the 2 years purchase. Here you can see on your screen, that is the 2 years purchase. So here we have got the answer of the first question, that is the amount of goodwill. Now one more question for a practice. Average profit earned by a business firm during the last few years is rupees 16 lakh and the normal rate of profit in similar type of business is 10%. Total value of the assets and the liabilities of the business were rupees 44 lakh and 11 lakh 20,000 respectively. Calculate the value of goodwill of the firm by super profit method if it is valued at 2.5 years purchase of the super profit. Now, goodwill equals to super profit multiplied by number of purchase years. Super profit equals to average profit minus normal profit. If we read the question very carefully, we can easily come to know average profit is already given in the question. Here on your screen you can also see that is the 16 lakh, that is the average profit is already given in the question. Now how we will calculate the normal profit? Normal profit equals to capital invested multiplied by normal rate of return. Now that is also known as capital employed. So assets and the liabilities have been given in the question, means the asset side approach has been followed to find out the amount of the capital employed. Now here is the value of the capital employed. Now we need to find out the normal profit. Normal profit equals to capital employed multiplied by normal rate of return, and the normal rate of return is also given in the question. You can see on your screen, that is the 10%. So normal profit will be 3,28,000. Now we can easily find out the amount of the super profit because we have got both the profit. Average profit already given in the question was rupees 16 lakh. Normal profit we have calculated, that is 3,28,000. So this is the amount of the super profit, 12,72,000. Now get the amount of the goodwill. 12,72,000, that was the super profit multiplied by 2.5 years, that is the number of purchase year that was already given in the question, that is the 2.5 years purchase. This is the amount of goodwill. Now one more question. On 1st April 2018, an existing firm had assets of rupees 1,50,000 including cash of rupees 10,000. Its creditors amounted to rupees 10,000. On that day, the firm had a reserve of rupees 20,000 while partners capital account showed a balance of rupees 1,20,000. If normal rate of return is 20% and the goodwill of the firm is valued at rupees 48,000 at 4 years purchase of the super profit, find average profit of the existing firm. If you read the question, you can get the concept what is being asked in this question. In this question, the amount of the goodwill is already given. In this question, the average profit has been asked. So how it will be solved? Have a look at here. Here is the solution. Goodwill equals to super profit multiplied by number of purchase years. Now super profit is already given. So goodwill equals to 48,000 equals to super profit multiplied by number of purchase years, that is the 4. So we can easily get the amount of the super profit. That is simple mathematical trick. So super profit equals to 12,000. Super profit equals to average profit minus normal profit. Now we need to find out the normal profit first because we have the super profit, and if we get the normal profit, then it will be easier to find out the average profit. Normal profit equals to capital invested multiplied by normal rate of return. Now the capital invested will be, here the asset side approach has been followed. You can also calculate the amount of capital invested with the help of the liability side approach, and the answer will be the same. That is the capital invested rupees 1,40,000. Now the normal profit is the 20% of the capital invested, that is the 28,000. Now the super profit, average profit minus normal profit. Super profit we have calculated, that was the 12,000. Average profit we need to find out, minus normal profit we have already calculated. So by shifting the figure from left to right side, or we can say from the left hand side to the right hand side, we can get the answer of the average profit very easily. That is the average profit. 12,000 plus 28,000 equals to 40,000. So this is the end of the lecture. Hope you all have enjoyed the session. Best of luck and all the best.